All right, guys. Good morning. Hope you guys are well. Today it is the FOMC day. It's the biggest day of the year, potentially. A lot of stuff happening today. We got the Federal Reserve rate decision at 2 p.m. That's the biggest thing going on today for sure. Yeah. Fed cuts rates at least 25 basis points today, at least. We'll see what that looks like. The question is, I think, we got a lot of people talking about it. I think if we do 50, it's going to freak people out. Let's just be honest here. I think if we do 50, people are going to freak out. It's a more desperate decision. It shows that they're panicking in a more greater way. If they weren't panicking, if the Fed was not panicking, they would not cut at 50. They would only do 25 basis points. A 50 basis point cut signals 0.5% in decrease in interest rates in a 6-week period. That's a big correction. That's a big correction. And again, I think if they do that, it's going to scare people. Nvidia came down a lot yesterday. Nvidia dumped, yesterday, all the way down to 115. Apple back up a little bit after some bad news, but pretty choppy market. Q is sideways today. Today's basically the Super Bowl of the stock market and the market's Super Bowl of finance is a better word for it. I'm not using Quantitative anymore. I'm using Topstep X. All right, guys, I'm ready. I'm excited, man. Honestly, it's a huge day. It's a notoriously big day, to be honest. Yeah, we're here. I'm excited. What do you guys think happens today? Good, bad, green, red, bullish, bearish. I almost said ghoul. Do you think a 50 or 25 basis point cut is best? 50, 25 BP, no cut, something else. Comment it up. Yeah, I think 25 is the best move. You guys know that. Yeah, Powell's speech is probably more important. I don't know. I think it depends on what happens. I think if we go with, I think generally the Powell speech is more important. What's described as Powell's tone is usually more important than the rate decision, because the rate decision is pretty already out there. But I would argue that this specific meeting and rate decision is different. This is the first cut in years, the first decision outside of a pause in over a year. We've been pausing interest rates for a year straight now. This is the first time we've done anything but pause in over a year. It's the first time we're cutting rates in years. Last time we cut rates was 2020. Or not 2020, but yeah, maybe 2020. Let me see. The last time we cut the federal funds rate, let me look at the graph. The last time we actually cut was 2020. This is what basically we cut rates in February of 2020. The federal funds rate was at 1.58. We cut it all the way down to 0.05, basically zero. Maintained it at these really low rates, basically paused rates at these super low levels, and then started raising them back up in 2022. Right, so the last time we've cut rates was years ago. 4 years ago was the last time we've cut interest rates. So this is a big, in that regard, I think that could have a big impact. The other thing is that if a 50 basis point cut happens, which is the most probable one, that might cause a panic, in my opinion. Maybe I'm wrong. What's up, Jeffrey? The FOMC meetings today, brother. Outside of that, we got some other stuff like housing data, but yeah. I think Powell's speech is going to be important, but I think the decision is important here. I think the decision is important. Yeah. Best for what? The market or the economy? The economy. Or both, really. But I'm going with, what do you think is best for the... Well, obviously, cutting rates is 50 is the best for the economy because it stimulates the economy the most, right? But long term, better for you guys, I guess, is the easiest way to put it. Like, what's best for you? What's up, Freddie? Yeah, but I don't know if the data shows that weakness, Phil, but I guess we do have a lot of people that think it does. I don't think 75 is on the table. I just don't. I don't think it's not even an option probability wise. Now, maybe this changes and moves leading up to this report, but I don't even think it's on the table, really. I'm about to dive in the ocean. Alright, guys. So, yep. FOMC rate decision today. Big day. Market might be flat. I'm going to attack chop leading into today. What's best for me? I'm in the long run. Who cares? I mean, what I mean is, like, the reason I mean, like, what's best for you all, and personally, what do you think is best? For me, I don't want inflation to go up more. I think pausing rates is best. I think that's the most balanced thing, is a pause, like, we're always pandering to banks here, and I think pausing rates, not raising them, not lowering them, pausing them at the 50-year average, which is where we are, is fine. People acting like we're some obscenely high level, and I'm using obscene more, not less now. People acting like we're at some obscenely high level when we're not. We're really on the last 50-year average interest rate, right? So it's not like we're super high like people are arguing. The economic data, unemployment's under 4.5%. Payroll numbers had one bad report last time. The rest of the reports were pretty solid. The JOLTS reports were okay, too. For the last 6 months straight, like, they've been pretty decent. Payrolls have been good. Jobs have been good. Like, to act like one bad payroll report signals some type of weakness, like, again, most people are pushing a bias, right? Which is that the world's going to end. It's doom and gloom. It's an election year, so, like, everybody's influenced by that. But the real reason people are unhappy is because prices are freaking high. They've been going up crazy amounts for the last 5 years straight. And that should be our priority, no? Is keeping stability in price. We need that. And I've said this every freaking day. I'll keep saying it. Yeah, they want to stimulate banking, is what it is, Phil. Market sentiment regarding economy recession if pause goes. Well, we're not in like, GDP's 3+%. Like, that's the crazy part. People are like, oh, well, what about a recession? Dude, GDP 3%. You know what I mean? Like, how like, listen, if GDP was 0.5%, 0.3%, 1% even, I could say, okay, like, maybe we're heading towards a recession. GDP's 3+% right now. It's not like it's crazy weak and we're, like, again, the problem is, like, there's so much bias floating around. People say, hey, it's bad, and so people just kind of believe it. They don't actually, a lot of them don't know what a recession is, right? A recession is 2 consecutive losing GDP quarters. We have to have negative GDP to be in a recession. And GDP has been trending up, not down. Over 3% last time. And maybe that changes this time for the second revision report. I don't want, like, I told people this yesterday and the day before, and I'm going to say it again, and I'm biased, and I could be wildly wrong, and maybe we are heading towards a recession. I don't know. I really don't. I'm trying to be objective here and understand my bias in all of this as well, right? But where my bias is here, and the Q's pushing up. Look at the Q push up, about to break highs of the day. NVIDIA bouncing back to 116s. My bias, and I'm gonna label it as a bias because it is. My bias is I've seen the price increases over the last 5 years. I've seen the real estate price increases. I've seen the car price increases. I've seen the obscene inflation that we have faced over a 5-year period. Everything is drastically more expensive. And so how do you handle that problem, right? The way you handle that problem is you restrict markets. You restrict spending. That's why it's called a restrictive monetary policy, a hawkish policy. Why? Because they're trying to keep interest rates high to stop people from spending as much so inflation continues to drop. And, you could argue, hey, inflation's at 2.6% or whatever the last report showed. And that's true. But again, I think we need longer term price stability, longer than a couple months. I think it needs to be like, I think we kind of need to compensate for a few years in terms of how much prices have gone up. Like, I guess my point is prices have gone like this, right? And now we're kind of here, right? In my opinion, in order to compensate for the drastic increase that we saw right here, in my opinion, we should go like this for a few years. At least down here, like we should like go like that for a few years. And instead, we're going like this. Like, inflation is going like this. And now people are just kind of like, okay, like that's good enough. Let's lower interest rates. And my fear is that inflation is going to go like that again. And the issue there is that nobody should like that. It's not sustainable. People work hard to make money. People work hard to get raises, right? People work hard to build up income for themselves. And inflation will take all of that away. You'll be break even. Imagine working hard to try to make $100,000 a year and then being told $100,000 a year is not that much anymore. You're kind of basically like average now. It's not some big flex like you thought it was. And again, if that continues, it's going to get worse and worse and worse. And the problem is that the rich is going to get richer in those situations, right? Like the lowering rates in this regard is benefiting banks, big banking. That's who it's benefiting. Like, let's just be real here. And my problem with that is that it's gonna be on the backs of everybody else. Like, we're gonna have to deal with this inflation. And I just don't want it to go up again. I don't want inflation to spike again. And sure, people are going to argue, hey, people got to be able to afford housing, and that's true. But when rates go down, what do you think is going to happen? When rates go down, real estate prices might go up because everybody's going to have cheaper access to leverage. And so what are they going to do? They might buy real estate. Supply and demand, prices might spike. And that's not good either, Real estate's already up 70% on the year. It's not sustainable in that regard either. It's going to cause everybody's rent to be more expensive. It's just, there's a lot of problems with low interest rate environments right now in this specific economy, I think. But yeah. Do we have anything this Friday? I don't think so. We got jobless claims tomorrow. But yeah, we don't have a labor report this Friday. We got a report next Friday. So next Friday we've got GDP and PCE data. Next Thursday and Friday. I'm pretty sure it's next Thursday and Friday. But it's not this Friday. So it's next week. Not this week. This week we got the big FOMC meeting. Next week we have manufacturing services PMI Monday, Tuesday CB consumer confidence, Case-Shiller house price index, Wednesday nada. Thursday we got GDP data. It's second revision GDP data on Thursday. Friday we got PCE data. So yeah, we got jobless claims tomorrow, but that's it. A 50 basis point cut is not going to hurt the markets because it is repriced at 50. Now, regardless of whether a 50 basis point cut is what's expected, regardless of that, we're not talking about the short-term reaction of it. I'm talking about the long-term consequences of cutting rates in a super aggressive way. And I think generally it's better to ease into it anyway, and I think a 50 basis point cut is not that. It used to be a flex a few years ago in the South, at least. Yeah, for sure. It used to be. It's not anymore, And, I'm grateful to where, I make more than that. But, regardless of how much you make, you shouldn't like inflation. You shouldn't like inflation. Especially if you're staying the same. If you're not getting a raise, inflation is going to affect you more than anybody. So, and again, it's to be balanced here. Just because we cut rates doesn't mean inflation will absolutely spike, right? A lot of the inflation spikes we got post-2020 were due to the quantitative easing, economic stimulus and stuff that we got in those periods of time. And so, it doesn't necessarily mean inflation will spike, but it could, I guess. Theory, it'll be 50. Powell may indicate they considered 25 last month, and anyone with no meeting next month, 50 is reasonable. Well, meetings every 6 weeks. So, it's not like meetings are never once a month. Meetings are always every 6 weeks. So every month and a half. I think either way, today's reaction will be negative. I don't know. I think the overwhelming expectation of it is negative, which sometimes means it goes positively, right? Like whenever I see a lot of traders jumping on one specific bandwagon of direction, I usually start to prepare for the opposite direction, to be honest. Again, an example of this is back here, extension's such a powerful foe. Extension's such a powerful thing. I should call it not a foe, but extension's such a powerful thing. Like, everybody was telling me the world was going to crash and that it was doom and gloom right here. But the reality of it is the statistic I always brought up was that there's only been 3 times in history in which we've had more than 2-year bear market. Only 3 times in history have we downtrended for more than 2 years. I think it's 2 years. Let me see. Yeah, so the Great Depression, the dot-com boom, and the 2008 market. Outside of that, so one of the things that you'll notice here is that when we start to head down, and we've been downtrending for like a year plus, it's pretty probable that we're going to bounce back. I think human nature tends to think that whenever we drop this much in markets that we, again, the example I always use is that if a rookie trader looks at a big gap up in stocks, the rookie trader might say, oh, it's gapping up so much, it's strong, let me buy it, and then they lose money because it corrects on the downside. An experienced trader might look at that and say, hey, it's up 15, 20%. It's up too much, right? I'm going to play the other direction. I'm going to short it, or I'm going to, not buy it. It's to extend it on the upside. Same concept here, right? An experienced trader might look at this and be like, yo, we've been downtrending for a year plus now. What's the likelihood that we continue down? Pretty low. Right, pretty low. And that's what I was telling people here is that we're down too much. I'm going to start buying stuff up. And I started accumulating stocks here and had some really good returns and made a bunch of money on this. Experienced traders look at this and say, yo, we're down for a year plus now. It's time to buy these dips, start DCAing into this and riding the rebound that's inevitable, right? And so I guess that's the thing that I see most people get wrong. Like, I really do see most people get this wrong. Right, like a lot of people are so biased towards crashes. Sometimes they miss out on moves. Sometimes they're so biased towards crashes that they never see when it's done. Like, they never see when it's extended. They never say, hey, we're down too much, I'm gonna start acquiring stuff. And it's important to have that mindset, because if not, you're just vulnerable to whatever direction we're going. You're just kind of riding bandwagons outside of that. Yeah, we're at all-time highs, but this is specifically on the downside. Markets will the general normal state of markets is up, right? Like, this is the truth. This is why long-term investing is. This is why I always tell people, if you find yourself shorting the healthiest companies in the world long-term, somewhere you've been misled. You're getting in one of the biggest sucker bets you could ever get involved with in finance. And a lot of people don't understand this, and so they end up shorting or holding shorts long-term with Apple and Amazon and Walmart, and they just get destroyed, and they don't understand it, and it's because the normal state of markets is up, not down. When I'm talking about extension, I do mean extension on both sides, but I think you also have to understand that normally the markets are going to uptrend. Like, that's the normal state of it. Downtrends have only had 3 instances in history, really, approximately 3 in history, in which they've downtrended for longer than 2 years. And so what that means is that when you start to downtrend for a year plus, you're probably okay. But again, you never know. Fed speaks at 2 or 2:30 Eastern Standard Time. It's 2:30 Eastern Standard Time. All right, so the FOMC decision, and we will stream. All right, so I'm going to put this up on screen so you guys can see it. Yeah, so the FOMC. Yeah, I mean, again, regardless of political anything, D's talking about politics and about how the market, like, the reason we're not going up is certainly, the reason we're going up is certainly not from that. The normal state of the market, regardless of which side is in power, markets are going up most of the time, brother. You know what I mean? Like, I think what you're probably biased with is that it's an election year. It's an election year. And so, and again, try to understand this. Like, I get it. People are super associated with political sides and they get really wrapped up in it. A lot of people like root for them like they're their football team. And so any even slight saying, hey, you know, any slight accusation of bias, people might get offended, right? But the reality is a lot of people are rooting for them and it's hard to be objective. And I'm not saying that's anybody here. What I'm saying is that it's an election year. During election years, one side, their job is to discredit the other, the side that's in power, right? I'm not even saying I agree or disagree with either side. This is just politics 101, regardless of which side it is, right? During election year, one side wants to make you think it's the absolute worst it could ever be, that any upward movement is just manipulation, that, you know, they're just trying to trick you and that the strength that you guys see is not real or whatever it is. They're going to do their best to make you believe that. Because why? Because they want you to elect the other side, right? And again, this is pretty consistent with both sides. It's not like only one side does this and the other sides don't, right? This is just pretty consistent with election years, right? And so I guess what I'm trying to say is the markets are going to move up regardless of who's in power. The markets moving up is certainly not something like, oh, they're just tricking you, you know? It's not real strength. They're just tricking you. Cough, cough, vote for our side. Cough, cough, cough. Right? Like, that's kind of how they get you. And again, I'm very neutral politically. I don't care about any of that stuff. Like, I avoid that because I see so many people get so wrapped up in it. And in general, you know, once you get to the tippy top, you know, it's all the same anyway, you know. Yes, and again, I'm very neutral. I really am pretty neutral politically. Like, again, both sides will probably dislike me, you know. Like, I think college should be free, you know. I think that's the standard of the rest of the world. I think big education is run amok and cause so much problems, and it's super expensive, and that's inflation's reflected there a lot, and that people should be able to get degrees for much cheaper, you know. I think, like, I'm okay with a certain, like, I'm not going to go into it. Right, but I'm a capitalist as well, so I'm in the middle. I really am. And again, both sides would probably dislike me, which is kind of where I'd want it. I'd rather it be that way, I guess. Well, it's not free college. It's taxed. I'm okay with my tax dollars getting spent on college. I think our tax dollars are wasted in a lot of other areas. And so let it pay for college. I'm okay with that, you know. I'm not saying it's free. I'm saying it should be free if people want to go, you know. Because at this point, it's, you know. the market for it is not reasonable, I think. Oh yeah, I'm against capital. Any stock trader should be against taxing unrealized gains, right? But I think it's also only for a very specific set of people, you know. So of course, most big CEOs are not going to like it. But again, I'm against it. And the reason I'm against it is because if you do tax unrealized gains, you got to let people write off unrealized losses. If it's balanced, and it should be balanced, everything should be balanced. And if that happens, we're going to have way more problems. I think less taxes would actually be paid, not more, you know. Yeah, 25 already baked in. Yeah. Right, I agree, Lyrian. I think that there still should be requirements. Like, you should still be able to. I think if you make the grades, you should be able to go. You know, and I'm okay with tax dollars paying for that. I think that'll ultimately boost innovation. It's the standard of the rest of the world anyway. You know. But again, if this is too controversial, again, I'm a capitalist, believe me, you know. But you know, nobody's going to agree one side with anybody. You know, I always told the same thing. If you claim to agree 100% with either side, you're either desperate to fit in or just dumb. You know, and that's the reality of it. You know. Well, I don't think communism works either, though. I think communes are great when you have small amounts of people in them, but when you have so many people in them, like an entire country, somebody's going to get power regardless, right? In capitalism, somebody's going to get power regardless, and at least in capitalism, they have to work for it most of the time, right? As opposed to the other side where they're just kind of blindly given it, and so they respect it less, and more problems end up happening, more corruption ends up happening in that regard. And that's something that you see reflected in almost every instance of it around the world. So, you know, there's that, and I think that's pretty obvious. And I think, you know, there's good and bad things. Again, I'm pretty neutral. I am very neutral. I'm going to move on from this conversation because, like I said, both sides will probably dislike me at the end, which is all right. Yeah. All right, guys. The NASDAQ at the top. I tend to think we're going to have choppiness today, though. And I might start day trading futures right now because I think we're going to get choppiness today, and we're at the very top of the range. And so I'm going to just buy a little piece here. Another green day yesterday. I'm trying to see how much. Yeah, I'm up hundreds and hundreds in this account. You'd love to see it. All right, so we're in 2 contracts. I'm going to take 4 contracts longer term position here. I'm going to take a longer term position, shorting the top of the NASDAQ here. You know, we are going to take a little bit added risk today in our funded account. We're already up hundreds. We got a big cushion on this thing already. And this is Topstep X, again, the biggest edge in funding, in my opinion. There's no PDT rule. There we go. Okay, there we go. I'm going to cut a piece. We'll hold the rest. Again, this is the biggest edge in funding. There's no commission. I'm going to go ahead and cut it now. I was going to hold it longer, but we had such a big red candle so quickly. We just made $30, $40 early this morning. And And again, we are slow grinding our account up. Again, Topstep X is the biggest edge in funding because they give you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what the monthly subscription is. The base one's only $49. They have some of the best rules in funding. There's no PDT rule in the futures market. You can day trade the S&P, the NASDAQ, gold, some currencies, no PDT rule. And it's just a great way to learn how to day trade. And most day traders lose. And so if you put up the money yourself, you put up 5K, 4K, 10K, you're probably going to lose that 10K in day trading. That's just the honest truth of it. And so what Topstep allows you to do is get started. You're still risking something. Most day traders lose. And so if you lose, you're out $50 basically for the monthly subscription. But if you pass it, you get a 90% split. You get to keep your first, I think it's 10K in profit. With a 90% split, if you're good enough, you can then withdraw, fund your own account. And it's the best of both worlds, in my opinion, right? And the other big thing is Topstep X has zero commission on Topstep X. There's literally no commissions, a small amount of fees. I can trade micro contracts and get in small little trades like this and really just build up good profit safer, in my opinion. Again, I can't guarantee anything. They're a sponsor of mine. They pay me money. I'm biased because of it. But yeah. I'll put the link up right there. Help support your boy here if you want. All right, I'm sorry, guys. Okay, well, yeah, we're gonna have to move on to our regular music. I wanted to listen to new music, but yeah, I'll probably have to work on doing that. The one thing I've learned in 10 years is some days aren't worth trading. Well, one thing that I started to do better, though, right? So, like, one of the things I started to do better is, like, okay, so I'm going to try to find an example of this, right? So here's the NASDAQ 100. All right. Some days, really volatile for the NASDAQ 100, right? Maybe you can use, like, some days you're just going to get these beautiful trends. Where, like, if I put the volume weighted average price up here, something like that, like, I just have these beautiful trends sometimes in the NASDAQ 100 where you just get really obvious upward moves, really obvious downward moves. You know, like here, you got a really obvious downward trend for hours. Then you got a really obvious upward trend for hours. And it's great. You got these really obvious trends, right? And those days are favorable. A lot of people make money on those days. A lot of people profit from those days, right? And that's the first way. And generally speaking, those days are the most like easy to profit from traders based off of how most traders trade. And I would usually make money on days like this, right? But then also some days we would have choppiness, right? So some days we'd have like basically like this, like Apple, where we're just kind of going up and down and up and down and we're faking everybody out. And right when we go up to the highs and everybody thinks we're going to break out, we slam back down and then retest it and then slam back down and then retest it, right? So everybody's getting stopped out here. Well, what I started to do is I started to pivot how I traded. I started to change how I trade in these funded account programs and really in trading in general. And so once I recognized, and there's certain events that go on in the market that let me know it might be more probable to get chop, right? So certain days like ahead of FOMC meetings, like days of the FOMC meeting, it's pretty probable we're going to have choppy, boring, apprehensive price action. You know, days before CPI, you know, the days preceding big earnings reports like Nvidia, a lot of the time we might get chop. And if we do, then I start attacking that chop. And so, you know, if the market's going like this, what's the best way to attack that? Very simple. You just buy the bottom here. You sell the top, buy the bottom, sell the top, buy the bottom, sell the top. And you do that until the trend breaks. If it does this over and over and over again, the problem that people are making here is that if it does this over and over again, right? Like if it goes like this, you know, the problem is that people see something like this, right? Where it breaks all these lows and they immediately start thinking that it's going to break down like this. When really the mindset, in my opinion, and I've kind of changed over time, really I think the mindset is like, if we do this, we're even more extended on the downside. The probability that we're going to go like that is much higher. You know, and another example is like people try to ride directional breakouts. If we go like this 5 times, even if we do break down, you know, that's 4 out of 5 favorable trades if you just kind of buy the bottom, sell the top. You know, I think that works really, really well. It's something I haven't really shut up about since I changed my strategy. And again, my stats reflect it. You know, my stats reflect it. You know, like so far in total, all of my trading days on Topstep, on Topstep X with this funded account that I'm currently on, right? Out of all the trading days I've traded, I have 70% trade accuracy. 70%. You know, like here's my profit graph over time to it. If you, I'll just go ahead and show you the whole thing. I've been trading very slow, very methodical. I don't need to trade large. I can trade large once I scale up and have over $1,000 in cushion is what my goal is, right? And so here's my actual stats, my actual graph. It's small, but I'm taking it slow and steady. And so that's my actual profit graph from this account. You know, I'm running 70% accuracy, basically 69% technically. You know, just to show you my net daily P&L, like just so you guys can see, I'll show you guys some other stats here. Here's my cumulative P&L. No red days really in a long time. Here is my net daily P&L. So pretty solid, pretty solid. You know, just to keep showing you guys this. Here's my actual weekly gains and losses. You know, and again, I'm taking it slow. I'm taking it slow. This week so far, I'm up 140 bucks. But I've only had, let's see, I've had 3, 6, 9, 10, 11. I've had 11 trading days, only lost 2. And you can see my wins are bigger than my losses with this system as well, right? So overall, it's working really, really well. You have to have a flow state almost in markets. You have to have a flow state in markets. You have to understand what the market's currently doing, you know, at any point in time. And that's a big factor of it, please. But again, we're going to be putting a video out about this pretty soon. I'm using 1 minute and 5 minutes, but everybody's different. Yes, guys, I've been using Topstep. I'm on Topstep right now. I've been using Topstep X. If you ask me about like battling of the funded account programs, I'm not going to answer. I'm pretty sure it might be the same person just kind of asking me in different accounts for whatever reason. Not going to get an answer. Again, right now I'm with Topstep. Topstep's great. Again, I think it's one of the best edges in funding right now. You know, Topstep X's platform specifically, you know. But I'm friendly with everybody else. Like I'm not, you know, I think they're all great, you know, but I'm on Topstep right now. No, the minutes come out every so the minutes come out every 6 weeks, but it's weeks after the original. So the schedule of these meetings, Adam, is that we have the FOMC meeting and then 3 weeks later, right? Because the both happen every 6 weeks, but at different times. The FOMC meeting happens, and then 3 weeks later, the Fed minutes report happens, and then 3 weeks after that, which is 6 weeks from the previous meeting, the next FOMC meeting starts, and then 3 weeks after that, the FOMC minutes report happens. So they happen every 3 weeks. We either get every 3 weeks, we either get an FOMC minutes or actual Fed meeting, but they both happen periodically every 6 weeks. Well, I'm gonna trade the open and talk about the big stock news of the day, and then we're gonna have a dedicated stream for the FOMC meeting and rate decision. Yeah, inflation is a problem, you know, and that's that's what, like, you know, it's crazy. You got people really pushing for rate cuts, and then, you know, you can tell people don't understand economics because people are bringing up, you got people bringing up rate cuts, and their argument for rate cuts is inflation, right? Like, does that make sense? That's kind of like saying, hey, I got diabetes, you know, give me some sugar. I got diabetes. You know, I guess that's probably actually a good example, maybe not the best. I guess it's like, hey, I got to eat some chocolate cake. Say chocolate cake is rate cuts. Hey, I got to eat some chocolate cake. Why? Because I've got high blood pressure. You know, that's the same argument of saying, hey, let's cut rates. Why? Because inflation's really bad. It's the same argument. You know, like that's going to make it worse, not better. Eating chocolate cake is going to make high blood pressure worse, not better. Rate cuts are going to make inflation worse, not better. You know, and that's the big misunderstanding I think a lot of people have, unfortunately. But again, big banks trick people, man. They, you know, this is going to benefit them, of course. It's going to benefit lenders, you know. It's going to be on the backs of everybody else. So yeah, I bought a house, guys. I bought a house. I'm excited. It's an investment property. We'll see how it goes. I haven't actually, but yeah, it's fun. Hey, thank you guys. Appreciate it. And again, like you guys hear me talking about how I don't want rate cuts. Rate cuts will probably benefit this rental property, I'm assuming, over the next few years. When rates go down, what's going to happen, right? People might buy more houses. They're going to have cheaper access to money. Leverage is going to increase. And so they might buy more houses. What happens when people buy more houses? Prices go up sometimes. I'm not saying it's a certainty. We could always have a correction, but I like real estate long term. I've given you guys the math behind it. So I got this property. I'm not going to be super specific. I'm going to call it $300K just because I don't want to be too super specific. Let's say I got a $300,000 rental property. And let's say I make 1% of that every single month in rental income, about $3K, right? We'll call it $2,500 just to be safe, just because sometimes you're not going to get the full 1%. So let's say we make $2,500 a month times 12. We're going to earn about $30,000 a year in cash flow from this rental property, right? Let's take about 40% of that off for insurance, fees, expenses, right? So take about 40% of that off, and we're going to have about $18,000 in cash flow from this rental property, and so, yeah, we're going to have about $18K cash flow from the rental property over a 10-year period. Just in terms of rental cash flow, we're going to make about $180K. Over 50% we're going to make. So that's, you can average that to about 5% a year, maybe 6% a year. We'll call it 6%. So we're going to make about 6% a year in rental income. And this doesn't include, right? What it doesn't include is that appreciation. House prices appreciate at about 4% a year, right? So let's say the house price appreciates at 4% a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in that same 10-year period, we're going to make about $144,000. We're gonna make about $144,000 in profit. Minus $300K, we're gonna make about $144,000 in profit, right? And that adds to the $180,000 that we're gonna make in rental income over a 10-year period. And so within 2 years, or within 10 years, the rental property will pay for itself, right? Now this doesn't include some taxes, right? But within a few years, the rental property will mostly pay for itself. What we also didn't include here is that, rent's going to go up as the house price increases, right? So let's say it was, was it 444 or something? What was it at? 445,000. So that $300,000 property is going to turn into 444,000 within 30 years or within 10 years. And so at this point in time, using the 1% rule, instead of getting 2,500 to 3K, we're going to get about 3,500 to 4K. So our rental income, we're going to be able to get more rent from it over time as well. And so the cash flow that we get from it's going to increase much more than this anyway, right? And so when you add all of this stuff together, you're going to make generally over 10% a year from real estate. It's not passive. It's a lot more work than investing in the stock market or anything like that. It really is. It's a lot more work. And some people might just be better off buying real estate investment trusts or something like that. But I think it's tangible. I like real estate because it's tangible. If I ever really need money, I can always get quick access to it through leveraging the house or mortgaging it or whatever. And overall, I just think it's solid. I think the place that I bought it in is going to appreciate over time, most likely as well. And I think that's very probable. Anyways. Oh, no, I already added to that. I took 40% of that off, Daphne. I took all the cash flow I got from it and removed 40%, which is pretty conservative in terms of, how much money it'll need. Probably won't need that much, but... I already took out taxes, Robert, but inflation is, you're missing the point in regards to inflation, right? The entire reason you buy this is to combat inflation. You buy this to keep up with inflation, because if you let your cash sit, you're losing it. You know, if I let my cash sit, so let's say I took the same $300K that this place costs, and inflation increased, or inflation happened about 3% a year, right? So this is an inflation calculator. So how much will 300,000? If I didn't buy this rental property and I instead just sat on $300,000 in cash, right? What's going to happen to that 300K over the same 10-year period? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And so in 10 years, I'm going to lose almost a third of buying power that I get from that 300K. And so the point is, the entire, like, people bring it up like, oh, you haven't taken out inflation. The point's going way over your head. Way over your head. The point of this is to combat inflation. That's precisely the point, is that if I sit on that much cash, I'm losing money over time, right? The only way to combat inflation is to stick it somewhere. Is to stick your money somewhere. Let me clarify. Let me desperately clarify that. The only way to combat inflation is to stick your money somewhere. And if you don't, you're going to lose money over time without question. And that's with 3% inflation. If inflation spikes up from these rate cuts, it's worse. You know, it's much worse. So, yeah. Well, I'm going with the average appreciation of residential real estate over time, hidden. And the average is 3 to 5. So I did 4. This one's a 3-bedroom, 3-bath. Well, yeah, I mean, like I said, guys, I took almost half the cash flow from the property off, right? And again, guys, like, look, you got a lot of people that try to argue that sitting on cash is the right decision. It generally comes from them being scared to invest their own money in something, right? And those are the people who lose the most money over time to inflation, right? Now, this is, you can always just buy bonds or do whatever you want to do, but you got to put your money somewhere. Yeah, again, so the real reason I bought this property, guys, is because I know my local real estate market. You know, where I currently live, you know, I see signs that it might be similar to Austin over time. If you look at people who bought a house in Austin 30 years ago, they are doing really, really, really well. Really, really well. And I'm not saying, even if it doesn't happen like that, you know, even if it's just normal appreciation, that's fine. But I'm pretty confident that even if it doesn't, right, the good thing about real estate is the cash flow can still justify the property. So regardless of whether it goes up or down or whatever, but the specific location, you know, I had the option of looking at a lot of different places. And we did. We looked at a bunch of different places. But this specific place, and again, I'm not going to be too specific. This specific place is good because it ultimately is in a place where appreciation is very probable. Very probable. Yeah, well, no, that's what. So Tim. So I did 2,500. I think I could probably, based off of everything else, like we did some research. We did 2,500, which is appropriate for a $300,000 house where I live. I can get about $2,500 a month from it. You know. So, oh yeah, we're just gonna have to research. I'm pretty sure it already has a tenant that's been there for years and that's taking care of the property. And you know they're a good tenant because basically they're leasing it out. and then they're staying there, and you know, whenever they have to show the property for sales, the property is always nice. It looks good, you know. So I'm pretty sure there's a tenant already there, and they're just gonna stay there. No, I'm not in Florida. Your thoughts on rate cuts today? I hope it's not 50, but I think it is. I think it's going to be 50, unfortunately, but I hope not. Yeah. I'm excited for it, mostly just because, like, look, I really don't ever spend my money, man. I really don't ever spend my money. I invest it, and so Carol gets kind of mad because I make good money, but I never spend. Like, I don't. She doesn't get mad, right? But she, you know, we gotta enjoy life a little bit too, I think, and we do, right? But you know, like I said, after this closes, I'm gonna chill for a little while, maybe enjoy my money a little bit. I think 50 might spark a panic. I think 50 is a desperate move. I don't think the economic data, like people, it's an election year, so they're getting pressure, right? But it's the data doesn't justify 50, in my opinion. Why does the data not justify 50? People acting like we're about to enter a recession when GDP's 3%. GDP's 3%. We had one bad payroll report. Unemployment's under 4.5%. GDP's at 3%. Jobs market has been pretty strong for 6 months straight, right? I think rushing into a larger rate cut like 50 is unnecessary. And again, maybe it doesn't. You know, I don't think one 50 basis point cut will do anything super substantial. I think if we start to consecutively cut 50, 50, 50, Powell said we're going to cut 4 times this year most likely. And so if each one of them is 50, that's a full 2 percentage points that we're going to decrease in interest rates. And so, you know, I don't know. Yeah, I don't know. What do you think about the yield curve inversion? Didn't it recently uninvert? Yeah, and you know, we thought about it, but like the problem is, like, I've never Airbnb'd properties before, and so it's a risky thing. You know, it's a risky thing. We would have to furnish it, you know. But like, I think Airbnbs, you just don't know if they're gonna hit or not. $50 wouldn't do anything, but it's what they did back in 2007. Well, yeah, in 07, like, so again, there's an added factor of this where another thing you want to listen to is what Powell's plans are in regards to economic stimulus, specifically whether they, like, Powell's currently over the last few years been doing what's called quantitative tightening. It's called passive quantitative tightening is specifically what he's been doing, which means that he doesn't directly sell their balance sheet off, but they, you know, the balance sheet is filled with like bonds that mature eventually. You know, a bond is basically loaning the U.S. government money, a treasury bond. And, you know, so if it's a 5-year maturity bond, if it's a 5-year treasury bond, you loan the U.S. government some money, and then after 5 years, you get your money back, and you earn interest on that money at a specific rate. Every year, they pay you that interest. And so basically, when the Fed's letting their balance sheet mature, eventually, once it matures, it basically falls off their balance sheet, as opposed to directly what's called direct QT, which is directly selling bonds, which is a much more desperate thing that they're currently not doing. But for the last few years, they've been reducing their balance sheet drastically, and this is another hawkish stance by the Fed in which they keep interest rates high, right? And so what I'm going to be paying attention to specifically for this meeting is if Powell's plans in that regard have switched. Right, if he plans, I hope, like, the problem with 2020 and 2008 and the inflation that we got from those periods was not just based off of rate cuts, but more specifically based off of, you know, money printing, essentially, like quantitative easing. And so with that, I hope they don't pivot towards that as well, because I think if they cut rates and they announce QE, that's certainly not good. that for inflation. That's going to be much worse for inflation. I think if they just cut rates at 50 and then they maybe or ease into it a little bit more during the next meetings, I think we'll be all right. I don't think it's going to be the end of the world scenario as long as they're willing to pivot that if we see bad inflation data. But if they start to do QE again, which is certainly not necessary, like we certainly don't need that. That is much, much worse if they decide to do that. And I don't think they will. I don't even know if that's on the agenda, but that's what I'm going to be specifically listening to in there. Because again, when they do QE, obviously it injects liquidity. QE is the opposite of QT. QT is where they're letting their balance sheet mature and run off. Passive QT, at least. Regular QE is the opposite. It's expanding their balance sheet. It's them buying up a bunch of stuff, right? And the way they buy it is they create bank reserves online first. And so that's the money printing aspect of it, is they create bank reserves and then they use those bank reserves to buy up a bunch of stuff. And it injects liquidity into the markets. When interest rates go down, everybody has cheaper access to money, so they spend more, and thus it stimulates the economy. But it's not good and it's not sustainable and it's not needed right now at GDP at 3%, unemployment under 4.5%. That type of thing from the Fed is not needed. It's certainly not needed, but it's an election year as well, and so maybe there's pressure for that too. That's something I'm going to pay attention to in terms of Powell's tone, what he says at 2:30, and we're going to stream the entire thing live like we always do. I'm not saying 50 is bad. I think 50 might scare people initially. 50 is a problem for inflation if we're not careful. Right now, one decision's not going to make or break anything. It might cause a panic, and I think 25 was fine, but I think 50 might cause more of a panic, and so you want to watch for that as well. But yeah, just be careful, guys. Stagflation. Yeah, stagflation. If you ever hear people throw that word around, stagflation means high inflation and high unemployment and high inflation is what stagflation means. All right, so again, market's very flat, very choppy like we predicted today. We're back down to that low level here. I'm going to wait to see if something happens first. Yeah, I don't think we're going to do 25. I think 50 is pretty probable. Again, I can't ever say for sure. One thing I talked about, I put a video out yesterday. One thing my mic is kind of screwing up, man. One of the things I said is that if whatever this shows 30 minutes before the decision is almost certainly what's going to happen. It hasn't been wrong in years in that regard. So if you look at this, and this is why I always kind of joke around and kind of not make fun of people, but 30 minutes before the rate decision, people will put out some wild, ridiculous expectations. Like people will start saying, oh, we're going to pause. And a pause isn't even on the agenda here. It's not even an option for it. And so whatever this shows 30 minutes before the report is almost certainly what's going to happen, right? And right now we're showing 50. So if it stays like this, it's pretty probable. At the same time, though, it's still up in the air. Generally it's much more weighted towards one side. And so 60-40 is not the most weighted towards one specific side. There's variance here. It could go either way. It really could. It could go 25, but I don't know. I hope it's 25. I really do. Yeah, we do have some data coming out. Yeah, so we do have some data coming out today. We'll try to day trade a little bit too. Hey, later, Lolo. Have a good day. Also, the incoming port. Yeah, so the yield curve uninverted, and that scared a lot of people too, right? Alright, so I'm catching back up on chat. Yeah, we got a full video breaking down like Powell, the Fed, like all that stuff. And the video did pretty well, man. I'm kind of excited. Like, I haven't done videos. I'll probably start doing videos like that where they're just kind of economic updates. Yeah. Yeah, if you want to check out the video where I'm detailing basically what's going to happen, and like, you know, all about the FOMC decision today. Well, I'll put a timer up later. Like again, as it says, the meeting's at 2 p.m. Eastern Standard Time. It is 8:13 Eastern Standard Time. So we got 4 hours. Or no, I'm sorry. We have 6 hours. Q is at 473. So the Q's down. I'm going to buy this dip, I think, on Topstep X. Let me find out where to go. I'm going to buy this dip. We have dropped drastically. Again, this is on Topstep X. Let me put this up. There we go. We will add to this 2 contracts. We got a little cushion already. 3 contracts. 4 contracts. 5 contracts. All right, we got max size here on this trade. Max size. I'm trying to play with the money we've made so far. There we go. We're basically flat. We took a little bit off just to protect ourselves there, to be honest. We got 3 contracts left. I think I'm right, but I think I got in a little bit too large a size personally. I'm kind of glad I limited my risk there, to be honest. I think risk-wise it was too much. Yeah, 5 contracts was max. It's alright. Oof. Glad I limited my risk a little bit there. I don't know. We're starting to retrace, actually. I'm going to add a little bit more. 4 contracts. And then I will use 2 contract increments. I made a little bit of money already, and I do want to take larger base trades today. And I think a lot of people are going to try to pivot bearish here, but we're actually going to go up. Potentially, I might be wrong, and we might just dump down. I really don't know. We're trying to catch a bounce here, is what we're looking at. I gotta cut it. This is too big, too weak. Very big drops here. We'll come back to it. But yeah, definitely not happy with that. We lost 10, 20, 30, 3, 40, $46. So we're down like 15 bucks right now, or so, 15 bucks. So it could be a lot worse, to be honest. Market's been slamming down. Yeah, it's micro, sorry. Max size, I guess, would be 5 regulars. Alright, so we did actually just make a lot of it back here. I still thought we would... here, I'm going to add to this now. I still thought that we would bounce some. And we'll get out the rest there. So, yeah, we just made 5, 10, 15, 25. So, yeah, we're green on the day again now, I think. Let me make sure. We're flat on the day, basically, now, which is fine. And, again, this is the biggest edge in funding. Again, Topstep. Check out the link in the description. It really genuinely is. No commission in futures on Topstep X. Small amount of fees. I can trade micros with no commissions. Imagine that. Imagine I could trade micro contracts with no commissions. If you're a futures trader, you know how powerful that is, right? And I was right about the direction too. Honestly, it kind of hurts. Like we ended up making 25 bucks or so from it, but look at this. I was correct about the rebound too. I gotta have more guts to stay in my positions because I was right. Look at it bounce back too. It's still early, so we're still playing with it. But, man, where's gold at today anyway? So here's Apple. I've had Apple basically up all day because Apple had some volatility yesterday. Here's gold. What's the new lifetime high on gold? It is 26.17. So we got a little ways. This is the new lifetime high on gold. FOMC decisions at 2 p.m. Eastern time. We also have, we got some type of economic data coming out today, but it's nothing big. We have housing starts. Or no. We had European CPI come out today. So European CPI showed up at 2.2%, 0.1% month to month. So a little bit better than expected. Everything else was neutral. Today we have building permits and housing starts data. Nothing big. Building permits expected at 1.41 mil. Housing starts expected at 1.31 mil. Because I don't actually set physical stops. I was absolutely right about my bounce prediction though. Look at that. It hurts. Again, though, like I said, I am running 70% accuracy in this account. We're up hundreds. I've been taking it very slow and steady, and sometimes we're just going to botch it, and that's okay, right? What I will ask, chat, is try not to be too critical. I think it's really easy to look at it in hindsight and say, oh, I should have done this, I should have done that. And as long as you're respectful, it's all good, you know? But yeah, hindsight trading's easy. I got to kind of be okay with losing sometimes, I think, and I am for the most part. Like, it doesn't affect me much at all, even if I have like a bigger loss on the day, you know. Yeah, all good, Tony Hawk. It makes sense. You're probably right. I probably should have done that. 65% now for 50. All right, so we jumped in a short here. I don't know if it's the right decision. We are in 2 contracts here. Luckily, we're flat on the day. I just want to see if we continue in this downward trend. I don't really like this big rebound, though, to be honest here. I don't like this at all. We'll give it one more second, but... Okay, that looks better. We'll add back to it now. I want to play chop. I don't know if this is choppy enough to play, though. You know, I do think we could break down a little bit more and start testing that previous closing price down here on the NASDAQ. But I also think that we could just continue straight back up and start testing highs again. I think either one of those things is plausible. And so I got to be very careful with how I trade. We'll let this candle play out. If it breaks the top, we're cutting it. Yeah, told you guys we're cutting it. So we're going back and forth. We're still probably flat. We might be down like 20 bucks or something. So we do have we have import export prices. Or no, I'm sorry. We have housing starts data coming out in 8 minutes. Not the biggest report. I think it's fun to take losses. Yeah, I mean everybody loses, you know. Again, the only people acting like they never lose are usually like rookie traders. You know, I see a lot of people that do something along the lines of like, what they do is, you know, they take a lot of risk. They take a lot of risk. They take a lot of risk, and they end up, you know, they lose, right? So say a good example of what I see people do a lot in trading is they lose a bunch of money, right? And then they take a massive amount of risk to make that money back. Let's say you lose $500, right? And so you gamble your whole account away to make the $500 back, you know, and say you do it successfully and you end up making $2,000 doing it, right? Because you took a massive risk, a massive gamble. It's nothing sustainable in your account. Your account won't be able to handle that long term. If you keep doing that, you're going to lose it, right? But let's just say you grind up, you know, you grind up to make that money, and you make $2,000, taking a big risk in the account, right? Well, a lot of rookie traders, like, they're desperate for validation. And so what they end up telling everybody is, hey, I make $2,000 a day trading. I make $2K a day trading. It's like, do you make that $2,000 a day? Or did you just take a whole bunch of risk in your account, risk your whole account to try to make it one day, right? And the truth is they just took a bunch of risk to make it one day, but then they go around telling everybody that they make $2,000 a day trading because they're desperate for validation. And so it causes this cycle where other traders see them do it, and then they, you know, other traders see them do it, and then they think that they have to do it, right? And then those traders start taking massive amounts of risks, and like it just kind of causes this terrible scenario in which, you know, traders are getting stuck. They're taking huge risks. They're risking their whole account. You know, and it's just not a good thing, right? They end up just losing so much money. Yeah, so we did go right back. I should have bet on the chop on the downside. I should have bought this dip instead of shorted it, is my mistake in the NASDAQ here if you look at it. But again, like I said, it's easy to look at it in hindsight and be like, yo, I should have done this based off of what it actually did. Market's just turning right back up. Just bounced all the way back up towards the highs. Not towards the highs, towards the VWAP 200 EMA level. Let's watch gold, Nvidia. See what they all do. Yeah, we'll cover housing starts and import. I keep getting it wrong. We'll cover building permits and housing starts. It's probably not going to influence anything significantly, but we'll cover it nonetheless, right? Like we're gonna watch it and see what the report shows in 5 minutes. Not realistic. Again, like I said, traders are so desperate to look good at trading that they'll say anything, you know. And people want attention, and so sometimes them acting like they're the greatest gets them attention, where the reality is most day traders lose. You know, I'm not even claiming to be a good trader or anything like that because I don't want to fall into that category. Like I do some things good, I think, and some things bad, you know, like everybody else. But again, I guess the point is like, you ever see somebody on Amazon FBA, right? And they're trying to sell you an Amazon FBA course, right? And they show you their actual sales versus their net profits, right? So if somebody makes $100,000 in sales, people who don't really understand business might see that 100K in sales and then start thinking that they're going to be able to live off of that, right? So like, if I'm trying to sell somebody a course, I could say, hey, look, I made 100K in sales on Amazon, right? But 100K in sales, anybody that understands business or margins might be what, like 20K profit, like actual take home, 20,000 maybe. So you're not going to really live good off of that. But then they use it because people don't understand it. People throw up their sales numbers versus their net profit just to try to sell people stuff, right? It's the same thing in trading where you got somebody, they take a whole bunch of risk and they make 5,000. Right? And then when they start talking to people, they start talk to their family, they talk to their friends, they talk to the internet, they say, I make 5K a week day trading. And again, it's like, do you make 5K a week, or did you take a whole bunch of risk, gamble your account, and make 5K one day? If you keep trying to do that, you're going to lose your whole account. Everything's going to go away. And again, people get suckered into that. And again, some people are so desperate to believe it's real that they ignore the red flags. Same reason people get caught in pyramid schemes, right? They're so desperate to believe that they're business people. A lot of times with pyramid schemes, they target people who are like, an example of this is like, I know a lot of people that talked a big game when they were young, a big game, right? When I was teenagers, they were friends of mine. They talked a big game. They said they were going to be the most successful person ever. They said that they're going to be like the greatest, And I look at it, some of them now that have gotten caught in these pyramid schemes or these multi-level marketing schemes is what I'll call them. And like what ends up happening is they want to look like business owners. They don't really understand business, but they want to look like business owners. And so, they'll take some type of, they'll give them some type of ridiculous name like brand ambassador or, whatever. And it'll make them think good. They'll say, oh, you're starting your own business. You're starting your own business, or whatever it is. And so they want to act like business owners. The people that get stuck in it, they want to act like business owners. And then they just kind of keep getting stuck. They keep getting stuck. That's what happens to a lot of people in pyramid schemes is they just want to look like business owners. But the problem, and I'm here to tell you, if this is you, the problem is that everybody knows that you're not a business owner in that regard, right? Like everybody knows you're not out here slanging makeup with Unique as a business owner. Everybody knows that, unfortunately. Like, you're just not. And again, I'll tell you this, with pyramid schemes, if you are, like, a small percentage of people are successful in these multi-level marketing schemes, and the ones that are, you could make so much more money creating your own product, your own service. If you've got the network to be able to actually be successful in one of these schemes, you could make so much money creating your own product and marketing it to the same audience, right? So like they make you burn bridges with family. They push you into burning bridges with family. And in order to actually do it successfully, you got to make, here, it's 8:30.
I know, but we have to.
Here, no, it's 8:30.
We just need to say.
All right, guys. Here, hold on. I'll be right back. Honestly, man. Can guarantee you won't turn a profit. Yeah, traders lose. Again, anybody that's saying I'm putting a downer on the trading because I'm trying to help people not get stuck, those are the people that have fallen for it hook, line, and sinker. Those are the dudes that it hurts so much to look at objectively, right? It hurts so much to look at and be like, yo, I got ripped off, right? And so they end up just desperately pretending it's real, unfortunately. That's how it goes. All right, guys, so there goes import-export prices. Or there goes building permits and housing starts. Didn't really influence anything. Housing starts came in at building permits came in at 4.75 versus 1.4. So actually higher than expected building permits showed up. Housing starts came in at 1.356. So both of them came out higher than expected here. Noticeably higher than expected. Maybe this means a good market in real estate. Maybe it means benefiting in real estate. Yeah, so there's the building permit data. I'm going to put the housing start data up. Alright, so yeah, sorry, I'm in a little trade in the background. I'll show you guys it in a second. Trying to see what housing start and building permit data does. It did have some influence. Like housing start and building permit data did have some influence over it. Do you think somebody can make a living solely off of trading? Sure. Yeah, absolutely people can make a living off of trading. I think most people lose. And again, like people have to understand. I'm not being a downer. I'm being honest with people. Like I'm trying to be honest with people because that's like listen, I don't sell a course. I don't even claim to be a good trader. What's the point of doing this if I'm not going to tell people the truth, right? If I'm not going to protect some traders from stuff, you know? And again, that includes like MLMs and all that stuff, right? Like what's the point of this if I'm not going to actually help people? You know, I could pretend to be the richest trader in the world. My house is very nice. I'm not bragging. If I wanted to sell you guys a course based off of my house and act like I made it somehow with trading profits, I certainly could. I could probably make millions doing this. I don't because it's not the right thing, you know. And I'd rather, much more rather be honest with you guys and tell you guys the real truth about it, which is what I try to do, you know. And again, some people it's going to hurt because usually those are the ones that have spent thousands of dollars following gurus, you know, and nonsense, right? Truth hurts sometimes, man. But the housing data looks optimistic, to be honest here. Much higher than expected housing data. Oh yeah, I could theoretically increase size for sure, but I want a bigger cushion first, to be honest. Like I want a larger cushion. I need a larger cushion first. I do not want to just jump right in and take huge size. Like I need, again, if I want it to sustain itself here, you know, I have to be able to, you know, yeah. If I want to be able to sustain myself. Oh no, I made it from other streams of income, from marketing, 100%. All right, guys. So, yeah, people are asking what time the news is. So the news is at 2 p.m. Eastern Standard Time. That's the biggest story of the day. So yeah, the news at 2 p.m. is the biggest news of the day, rate cuts. Sorry, I'm kind of doing some other stuff. Like I said, I just bought a house, so I'm trying to get some stuff done on that end of it. Looks like Algo running with order to buy big time. I like this channel. Yeah, but I mean, Jake, so no offense, Jake, but you've been kind of critical of the channel before. No offense. Number two is that I'm going to do it every day, at least once, right? And the reason I make these same rants every day is because I think they're important for every trader to hear. You got to understand, it's not the same people here every day, you know? So, like, I'm going to say the same things over and over again. And again, no offense, but if you don't like it, you can unsubscribe. And again, it's all love. I'm not mad at all about it. Like I said, we all like different things, and if that's not what, you know, floats your boat, it's all love, right? It really is. I genuinely understand. But understand, I'm going to keep doing them every day because, again, like, look, I make a good amount of money doing this. To justify that in my mind, I got to help people. And the way I help people is not just by teaching them about the economy and data and economics and trading. It's also about helping them avoid scams. You know, so while it might be beating a dead horse to you, to others that haven't seen it before, it's protecting them, you know? So I guess that's the point. Do you think investors will shy away from gold and start moving money into crypto with gold so high right now? I don't know. I think gold's going to go up no matter what. I think I'm not really into buying gold right now. I think you could buy gold if you think we're going to enter a recession sometime soon, you know? But again, I think these rate cuts are going to do, I think, okay, gold is a good long-term inflation hedge, and it generally performs well when people think we're about to enter a recession. But rate cuts are designed to avoid a recession. And so if the rate cuts do their job, we're not going to enter a recession anyway. And gold, again, gold's already been uptrending for almost a decade. Now, it's just not my favorite time to buy gold. And maybe I'm wrong. Again, I could be wrong. Yeah, appreciate it, Daniel. Yeah, we do our best. Yeah, so the market came right back up. Look at this range that we predicted, that we called out. Yeah, so right now, 65% chance of a 50 BP cut. Again, I think it's... pretty probable we do 50. I generally, it doesn't change that much same day. Right, so leading up to that report on the same day, generally, it's not... Generally, on the same day, it's not going to change that much. It could, though. It could. Yes, this is an Express funded account that I'm trading, yes. One reason I don't like to buy gold is this commercials I see old people TV networks. Yeah. Well, they're making money through margins. Right. And so an example of that, Matt, is like they might sell gold. Like they might sell gold. Look at the market rip up here. I might start to short now. They might sell gold, and let's say gold is at $1,500 an ounce. Right, it's currently at like $2,600 an ounce, but we're going to use $1,500 an ounce as an example. And they'll sell it, their margins in this gold will be like, they'll sell it for like $1,700 an ounce. And so they're profiting $200 an ounce anyway. So they're profiting this to everybody they sell it for. So they're taking a finder's fee in it, right? And they make it, and so that's why they have the money to market it to everybody, is because they're increasing the price of it a little bit and they're taking some off the top, right? And really they're marketing it to people that want physical gold, that aren't really super aware of like what the real price of gold is and all that stuff. Man, look at this big run in markets, guys. Wow. I wonder if building permit data really helped the market this much. Wow. right, so we've had a lot of red action, or a lot of green action over the last 10 minutes. Big upward pops. We're at the very top of the range now. Nice. So this is live. Yeah, well, we're going to be streaming the full press conference later. But it's going to be later, you know. So yeah, we're going to stream the full press conference later on. But again, it's going to be a little bit later. So we finally got a little bit of a pullback. The market's been churning up. Right. Well, I mean, you also have to think of it as like a lot of times they buy it in bulk. There's a lot of margins, and again, they understand over time it's probably going to go up, but they're making their money in the middle somewhere, right? The people who sell gold on TV, right? Also the people that do like gold's boxes, right? So again, like an example is that you got monthly subscriptions of people selling gold. They sell silver. They have a box, right? And the box has all this different stuff in it. It's got like gold, you know. It's got silver, you know. It's got whatever, you know. And so this box, like fair market value for this box might be like $300. You know, $300. But they're gonna sell it in a monthly subscription for $400, right? And so they're making 30% on how much that box costs. They're spending $300 on it. They're selling it for $400 in their monthly subscriptions, and so they're making their money. And when you do this, like right when you if you got 1,000, I don't know, yeah, I guess 1,000 is a good number. If you've got 1,000 monthly subscriptions out there and you're making $100 each, you're making $100K a month from that, you know, if you do it every month, you know. So like that's the math behind these businesses. Like that's what they're doing, is they are profiting. And maybe their margins are worse. Maybe they're making $50 a box or whatever it is, but they're making something. They're not selling it to you for pure market value regarding gold. They're not selling it to you for freaking whatever gold is an ounce right now. Like they're tacking on a little bit for it. They're taking their finder's fee from it. And generally speaking, if you hold on to that gold, you're still going to probably make money. And so it's kind of a win-win scenario. Like the people buying that gold, if they sit on it for 20, 30 years, they're going to make money most likely. You know, and so everybody ends up happy. These guys are just taking the quick money, where the people investing in those boxes are profiting long term from the gold appreciation. So generally speaking, everybody makes money. But yeah, you're getting a little bit ripped off. It's the same thing that people with Rolexes do, right? Like I love watches, right? People earn a full-time living. You want a business idea, and it might be saturated, but people earn a full-time living buying Rolexes, right? So right now you buy a Right now, you could buy a Batman Rolex, right? A Batman Rolex. You buy one right now for like anywhere between $13K all the way up to like $15 to $16K, right? So you got a $3,000 difference here, you know, range of how much you can get for it. And so people earn a living in Rolexes, and Rolexes generally appreciate over time as well. In the last 10 years, they've doubled in value. So people who bought Rolexes 10 years ago, they've made 100%, right? So in terms of similar gains to the S&P, to be honest. But again, it's a long-term thing. More, I would argue it's more kind of like gold, but that's a different story. But anyway, so you buy Batman Rolex. A lot of people earn a living buying it from $13K from sellers and then listing it for $16K, right? You do this, you know, you do this 4 times a month with different watches and different brands. You know, you're earning $12,000 a month. You're earning, you know, whatever that is a year, 12 times 12. So you're earning $124,000 a year based off of that. So I mean, look, you do that 3 times a year or 3 times a month, you're earning $144,000 a year. I mean, sorry. And a lot of people are earning a full-time living off of that, just being kind of middlemen, and you can do this with a lot of different watches. When you get up to the high expensive watches like Pateks, they're really, really expensive. The range is even bigger on those Pateks, right? So, say you got a Patek, you can get it at the low range for $70K. Maybe that's a bad example. You can get some Pateks, and this is just a random example. You can get some Pateks for $60K at the low range, and at $75K for the high range. Right? And the people that can afford Pateks, sometimes they're willing to spend that $10,000 extra to make sure it's real, to make sure it's legit, to have you do all the work for them. Right? So in that regard, there's a $15,000 difference. And so people earn a full-time living buying Pateks for $60 and then immediately finding somebody else that'll buy them for $75, $70, $75. Right? Now, it's not a perfect business. You have to... taxes is what gets you. Taxes. And a lot of them don't pay taxes, and so it's kind of this weird thing. I'm certainly not telling you not to pay taxes, but a lot of the guys doing it, you can tell they just don't pay taxes. So it's kind of a mess in terms of that aspect of business. But again, there's a lot of ways to make money online. The problem, everybody always acts like you have to go work a conventional job. And I think in modern age and technology, it's just different. It's just different. No, 100%. I get it. You're not argumentative. I don't think you're not really disagreeing with me either, Matt. You're disagreeing with the people slanging gold. So it's all good. I don't take offense to that. And again, like I said, my guy, whoever he was, disagreed with me earlier. I don't ban anybody for disagreeing with me. As long as you're respectful about it, I'm not going to ban you, not unless it's just over and over and over again. If it's over and over and over again, and I think that you're just doing it to poke, then you're going to get banned, right? But as long as you're respectful, every now and then you can disagree. I'm okay with it. How do you sell an expensive watch online? I mean, how you sell anything else? Facebook Marketplace, there's actual databases, eBay, you can just post ads on Craigslist, whatever you want to do, right? But if you're going to do this, I'm not telling anybody to do it, but if you're going to do it, you got to understand the fakes are incredibly good nowadays. The counterfeit watches, the fake watches, the clones, they're called super clones, are the really good ones. They are very, very, very good. Very, very, very good. Anytime I've bought a watch, I have gone to an independent jeweler and I've made them take the back off of that watch before I paid for it. And I've looked at the balance wheel and everything else on that watch, right? And I'll have them confirm it's real, as well as I want to look at it myself. The real ones specifically have a free balance on it, meaning the fake ones, like, let me see if I can find a picture of this. Fake Rolex movement. So yeah, fake Rolex will have a very specific tell. And they might fix this pretty soon, right? But the fake Rolex's tell will be this. Okay, here's a good example of one. A fake Rolex's tell, it'll look virtually identical. Even the back of it will, right? So even the back of the Rolex will be virtually identical to the real one. Where they get you is the fake ones, it's too expensive to have freestanding balance. And so the fake ones will have multiple arms here to hold it, right? Multiple arms to hold it. If you crack open a real one, it will only have one of these arms, right? So it will only have one arm, and the arm's going to be in the center. So the arm would be here instead. It'll be a little bit larger, and it kind of look like that on a real Rolex, right? That's how you know the movement's real. And now there's a lot more to it. Outside of that, you can just get a jeweler's loop out and look at it in that way. But the fakes are getting really good. So if you do ever decide to do this, guys, you just got to make sure you do your own education on it. You got to figure it out. Anyways, going back to stocks, rates, we had a little segue into watches. Yeah. Yeah, swatches. Yeah, for sure. There's a lot of good watches. Not just Rolexes. Rolexes have the best chance of appreciation. If we look at the graph here for Rolexes. If you look at the graph here for Rolexes, here is a long-term Rolex chart. So people have to understand, Rolex My gosh, how long have I been muted for? Sorry, guys. My mic, it's like if I bump the mic wrong, it's acting weird right now. Sorry. Let me see how long it was been. Okay, so yeah, so here's the Rolex. One of the things that you'll notice is that in 2020, the Federal Reserve cut interest rates. They cut interest rates. They sent out stimulus checks. And so you'll notice a very obvious correlation here, which is 2020 happened right here, and Rolex prices doubled in that period of time because everybody had cheaper access to money, cheaper access to leverage with low rates and stimulus checks. And so Rolex prices, Bernard Arnault, Louis Vuitton, they all benefited for sure. And I guess the overarching point I'm trying to make here is that you can find ways to make money if you're interested in it, you know. Yeah, I mean, you could buy it authorized. You could buy it ADs, Powell, but the problem is, like, the reason there's such a big high premium is that if you get a watch from an AD, which is an authorized dealer, like an actual Rolex dealer, like if you want the Batman, the one I used the example for earlier, you're going to wait 3 years for that Batman, you know? And so, you know, you want like a Daytona, you're going to wait a decade for that Daytona. You're not going to be able to get it from them, which is why there's such a big difference, because people would rather pay a gray market dealer an extra 4 or 5K just to get the watch today versus waiting 5 years for it. You know, the really like the really hot watches. That's what happens. You know, that's why there's such a big variance in price, is because, you know, that's why you can make money on it, because you can buy them at the low end, sell it at the high end. You just got to make sure you do it right. You know. Yeah, sorry. All right. Anyways, looking at our poll numbers, 49% think 25 basis point cut is best. It looks like most people agree with me. That's out of 1,400 people here. 1,400 people think the same thing, and I agree. I think 50 is an overreaction. I genuinely do. I think 50 is an overreaction, but I think we're gonna do 50, and so we'll see if it sparks a panic in markets and everybody gets scared. It's possible, but you never know. Yeah, but I was never about Pell. I was never about, like, I bought a couple watches from an AD. And yeah, I made money on them. Like, I bought one, it was a date just, but it was a diamond date just it was like a gray dial diamond date just. Bought it from an AD. And if they find out you're trying to sell them, they won't do it. But I bought it from an AD, and then I traded it for a watch I actually liked. I'm not a big diamonds guy in men's watches. I'm whatever floats your boat, but I'm not gonna wear a diamond Rolex. That's just not my style, you know. It's too flashy for me. And so I ended up trading it for a different one, you know. And I don't even know if I'm gonna keep the other one I traded it for. I don't know. I don't ever wear them. They're mostly in safety deposit boxes, so I don't really wear them like that. They're just kind of stores of money or holds of money, a way to hold money, sit on money. Diversification, I guess, is the easiest. 50 basis point equals a hard landing. So you think a 50 basis... I mean, I'm confused about what you're saying, Alex. Do you know what a hard landing is? A hard landing means we raise rates enough to combat inflation, but we also enter a recession. And so cutting rates 50 basis points is not going to mean a hard landing. It would mean, you know, again, 50 basis points. We would have to show signs of a recession, which we don't. GDP is currently at 3%. You know, I think we've had a soft landing already, and that's why they're cutting rates. But, you know, I don't know. Maybe I'm wrong. Right, it's always to combat inflation, Nick. And that's why when people say, hey, what about inflation? You're not taking inflation into context. It's like, that's the point. The point of all this stuff, the point of watches and gold and the S&P 500 and real estate, rental properties, is to combat inflation. The overarching goal is to make it so that my money doesn't dwindle from inflation over time. Because if I let my cash sit, if I sit on cash, I lose it, you know? And that's something that everybody should understand. If you do not, and if you diversify in a lot of different ways, it's relatively safe. Nothing's perfectly safe, but if you diversify into all these different niches of investments, then it's relatively safe. Yeah, I mean, Topstep's paid out $40+ million to traders, so you know. Yeah, today's like the Super Bowl of finance. It really is, Chad. It really is. Yeah, we'll see what happens. We'll see what happens. $25 basis points inflation will be super retained by November. I think you have to understand the higher rate cut, the more likely inflation isn't tame. The lower the rate cut, the more so rate cuts and inflation are going to have an inverse effect, or are going to have a positive correlation, actually, now that I think about it. So like the greater the rate cut, the more likely inflation goes up. And so in that way, it would have a positive correlation, not a negative one. Yeah, so market's pretty flat. I'm going to target this choppiness at the open. So if we make a big move down, I'll probably start to buy it up. If we make a big move up, I'll probably start to short it. It depends, though. I'm not 100% like dead set on that. I might wait, but that's the plan so far. What do you guys think? What do you guys plan for the open today? What do you guys plan for today as a whole in trading for the FOMC meeting? What do you guys want to do? What do you guys think is best? You know, Nvidia has dropped a lot yesterday, so it's all the way down to 15s. Micros only, sitting back today, not to get liquidated. Yeah, I think we'll go up from here until the end of the month. Maybe. Bonds, yeah, maybe. ANY symbol. Hold on to my hide under the bed. Yeah, maybe. Sit back, relax, and watch. I'm gonna attack Chop. At least try to attack Chop. You know, we'll see. Yeah, I'm definitely down on the day trading. Haven't really gotten a good rhythm in. Comes gold. Yeah, gold's bouncing up a little bit. I saw the stat every September we start a negative 100% sell-off. It's definitely not every September, right? I mean, I'll have to check the data, but it can't be every September, no. It's probably maybe some Septembers. I mean, generally on average, September has a minus 1.5% move in the S&P 500. So generally, on average, September loses 1.5% of in September in the S&P 500. Yeah. Yeah, I'm watching the S&P. The S&P's broken all the way up to the top. It actually broke highs for a split second at 474 and then came right back down, and now it's just kind of consolidating up there. This is a 5-minute chart. So I'm going to put a 1-minute chart up. It's so choppy and flat today. Like, boring. Let's see if we get any good action, but it's just boring right now. Crazy choppy when the first week is negative in September. Video looks like a bull flag. Yeah, Nvidia's gone down a lot. Yeah, it's too politically. I see the world. I'm not going to answer it. It's just too political, bro. Yeah, we'll see if the market starts to come back down. I would short up here, but we've gone up so much, and it's kind of like back and forth, back and forth, back and forth. I don't want to get stuck in like a big high break or anything like that. Yeah, historical data doesn't, like, a lot of people think we're going to go down from the Fed meeting, and it doesn't always happen, right? But they act like we 100% always go down every Fed meeting. And I just don't know. I don't think that's what we usually get. You know, again, I blame it on YouTubers that tell everybody the market's going to crash every other Fed meeting. Every meeting, they say the market's going to crash. And then the 20% of the time that they're right, they hyper-focus on that to act like they're right every time. And it causes this, like, blindness in traders where they think every major FOMC meeting we're going to have some type of brutal market drop. And it's just not how it goes usually. Actually, most of the time, I think we stay within the range. But sometimes, depending on what he says, it depends on what happens. And this is an important meeting because this is the first time the Federal Reserve is cutting rates in 4 years. Last time they cut rates was early 2020. It's the first change in rates since last year. You know, the last time we did anything but a pause was, I think it's either August or September of last year. So it's the first big change in rates in that period of time. It really is like the Super Bowl of stocks and finance, really. Not even stocks, but finance. It depends on how much rates are cut. Somebody said rate cuts, initial reaction. What do you think? It depends on how much we cut. If we cut 50, I think it could cause panic. Although 50 is kind of what's expected right now. So 50 is kind of what's expected right now. You know, so I don't know. It depends. A lot of ifs. You know, market's kind of getting even tighter range now, too. It pulled back a little bit from those highs, but now the range is even smaller. Very choppy neutral range right now. We're watching Nvidia to see what Nvidia does. If Nvidia rips up, sure, we might do something. But if Nvidia doesn't move up, then the rest of the market might just come back down. Boring range though right now. I don't know. Somebody's saying, and generally speaking, that's correct. In which Powell's tone during the press conference is a bigger influence than the actual rate decision, and generally that's true, right? But with this specific meeting, I think it's different, man. I think right now we're doing our first rate cut in 4 years today, and so I think in that regard, it's just different. I think it's much more possible we get volatility from the rate decision now versus what he says, but who knows? That might still be right what he says, and because it's kind of like guidance with earnings, right? Like you can know what the earnings are going to be, but the guidance are going to be the big differentiating factor and direction. It's kind of the same thing here, where we'll get an update on what the plan is for the rest of the year with regards to rates, and that might have a big influence over movement. But we'll see. We'll see. Yeah, I've been kind of like going back and forth in my actual funded account. I'm in this little trade here. I'm basically completely flat. I'm short at the top of the range, but I have no idea what's going to happen here. I'm just kind of letting it play. What I've been trying to do is get into a big enough amount of profit to add to it, but it hasn't worked out perfectly because like we just haven't really held in any one thing. We've just been going back and forth, so kind of boring. No, I'm not streaming until then. I'm going to cut the stream and be back on later. We'll just cut out there. So yeah, we made a little bit of money over the last few trades, but we'll figure it out. I think the cut will be great for Tesla today. Oof, I don't know. And again, if you want to check out Topstep, that's what I'm trading on, is Topstep. Like, people acting like whether you can actually make money on funded account programs. I mean, you obviously can. The problem with these funded account, most day traders lose money, guys, right? So it doesn't matter if they're trading on TD Ameritrade, Charles Schwab, E-Trade, Interactive Brokers, Topstep X, right? Most day traders are going to lose money. You know, what people have to understand, and again, a lot of traders aren't the most introspective. They end up blaming their losses on whomever they can. The truth is, most day traders lose. And that's the same anywhere you go. Most day traders are going to lose. It's a lot cheaper to lose on Topstep. Most of the time, at least. Not always. But it's a lot cheaper to lose on Topstep than it is to put up $5,000 and lose that. You know, most of the time. And so the traders that end up losing the challenges probably would lose much more if they put up the money themselves. And so that's the reality. You have to have reasonable expectations for the funded account programs. It's just teaching you how to trade under pressure. And if you're good enough to pass it, great. If you're not good enough to pass it, you probably save money, you know. And I think that's the lens you have to look at it under. But, of course, traders are emotional people. They end up blaming their losses on anybody but themselves. They don't want to be accountable. If they take a bunch of dumb trades, they want to blame it on whoever else they can, you know. And that's human nature, I guess. We all talk about rate cut. What happens if there's no rate cut? John, what's your opinion? I think it'll shock markets. Yeah, it's almost certainly not going to happen. The probability of that's less than 1%. And so, you know, we're going to cut rates today, almost certainly. Now, how much is the question? And right now, that's 60-40 for 50 basis point cuts. 60-40 is 25 basis points. All right, so his Q is right at the top of this range again, Chad. And again, we'll see what happens. Yeah, I mean, I don't really need to get funded, Spar. And so, you know, I just started back with Topstep. But again, like, understand, my TOS account almost all year has had hundreds of thousands of dollars in it. You know, liquid. You know what I mean? I took some of that out to buy this rental property, but the point is, I don't need to get funded. I don't need funding at all. And again, like I could act like I do, but I don't. But again, that's not everybody. And I'm the only reason I'm telling you all this is so you understand I just don't need to get funded. Now I'm up hundreds in this account so far, and it is a 50K funded account, and I'm probably gonna withdraw from this one just to get it in. But like I said, honesty is, I try to be honest. I don't need to get funded. I think funding is useful for most people who don't have that much money, right? And I think if you're new, which I am not new, then it's a great option because most new traders are going to lose thousands just in how it goes, right? So it saves you money in that regard. 75 rate cut. Yeah, we're not going to do 75 basis point cut. That would shock the markets as well, I think. All right, so is oil up today? I see some geopolitical uncertainty stuff happening. Oil is down a lot today. Part of me kind of wants to buy it, but I also don't. All right, guys, I might have to start switching my mic out. I have another cord. I'm going to see if this other cord works. I have another mic. Hold on. Like, maybe I'm just... All right, can you guys hear me? Are we good? Mic check, 1 2 1 2. I switched the cord out. I got multiple cords, so hopefully that fixed the problem. It just keeps muting it. So this is the NASDAQ 100 on the right. Here's oil on the middle. Here's NVIDIA at 116. Yeah, I think the markets have already priced in 50 to a certain extent for sure. Now, I don't know how much. I don't know if there's we could obviously have a big reaction regardless of whether we're priced in that way or not. We just don't know. How Powell coming? Yeah. When holding over the FDIC's 250K be risky though. In what? September Bears going to show up today. It depends on what the decision is. It depends on what Powell's tone is like after the meeting. For sure. All right, guys, we got 14 minutes until the market opens. 14 minutes. We'll see what happens. Again, I'm ready. Oh, really? Yeah, guys, hey, I know I'm muted. I'm talking to my wife about something, trying to plan something here. So I'll be right back. I'm going to unmute it in a second. I know I'm muted. I'll be right back. So, all right, guys. Sorry, I'm back. I had to mute it. I had to talk to a wife. We're trying to plan some stuff out here. Carol's one of my top 3 wives in the world right now. So, we just try really hard to, have that good relationship. We're planning stuff out. Secret of the market, bro. I'm talking about the secret of the world, the meaning of life over here. All right, guys. 2 minutes. FOMC day. Let's see if we get something good. Will mortgage trust goes up if interest rates go down? Maybe. We don't know. A lot of stuff's up a lot. The quote of the day. A lot of stuff's up a lot. No, but genuinely, markets are up a lot, guys. Real estate prices are up a lot. And so I don't know if, logically you would think with lower rates, cheaper mortgages, more free loan, or more cheaper loans, all that stuff would make house prices increase. But you never freaking know. It's a little bit more variance heavy. Yeah, so again, we're back up to yeah, I mean, all good. Stop loss. I'll work on it if it makes you feel better. Again, I'm probably going to say it at least once a day. But, again, I'll work on branching out. It's all good. Anyways, Tesla at 230s, guys. Tesla at 230s. Like, I know I say the same stuff, but you guys got to understand, we're also covering, like, market news. So, like, my channel is mostly reporting market news. Like, yeah, we might say other stuff that we might repeat ourselves outside of that. But we also stream for 4+ hours a day sometimes. So, like, we're going to repeat ourselves, and that's pretty normal. And, again, I'm going to say the thing about traders losing money and about all that stuff at least, once a day. And again, if you don't like that, again, it's all love here. You really can go to another channel and watch somebody else if you dislike it that much. But I hear you as well. Like, like I said, I'll work on it, I guess. I mean, food delivery apps, you're not going to make it. Like, we talk about a lot of businesses. Like, just today alone, real estate, watches, S&P 500, NASDAQ. I think we talked about appreciation in those things as well. We talked about MLMs and multi-level marketing schemes. We talked about a lot of different business, stock market, rate cut reactions and expectations. So, we try to make it we try to provide value, I guess, is the point here. Like, and I think we do. I think the real reason we get lots of people tuning in is because we cover economic stuff fast. We cover economic data as soon as it drops, and people know we're reliable for that in that regard. So, and we trade live at the open, so we'll see how that goes also. Yeah, I think constantly repeating it is incredibly important. But yeah, so the problem with food delivery, Stinger, is that gas is expensive, brother. Gas is expensive. Margins aren't good. Like, yeah, you could do it, but I think there's better ways to make money. Right now, I think it's a good option. You know, like I get people asking me all the time, and they're like, yo, I've got $100, bro. What should I do with it in the stock market? And like I always tell them the same thing, like keep it. You know, $100 is not enough to do anything. If you only have $100, if you only make that small amount, you want to find another way to make money, you know, and maybe you could use, to segue into food delivery, maybe you could use food delivery for that as just a means to get by until you figure something else out. Again, in general, there's lots of businesses you could start. There's lots of ways to make money. Most businesses fail, you know, 5 out of 6 businesses fail. And most people have to start 5 or 6 businesses before they have one that takes off, right? And that's, in my experience, pretty accurate. Right? You start 5 or 6 businesses. Eventually, you got one that sticks. But the one that sticks can pay you for the rest of your life, you know, and get you in a really advantageous financial situation. But most people give up prior to that. Most people start 2 or 3 and then they just stop. A lot of people start one business and then they just never try again. And that's the mistake that a lot of people make, is that they just give up before it's really time to. All right, sorry. What's your view about 9 to 5 work versus starting a business? I think you have very well-rounded content. Hey, thanks so much. I appreciate it. Yeah, again, the person saying it, I've never seen them before. And so like you got people, like I said, you got these weird people that just, they get super obsessive about the channel. I think I probably know them in real life somewhere, and something about this is making them kind of insecure, and so they're obsessive about it now, which is kind of a weird position to be in for me. But maybe that's not it. Maybe I'm just paranoid. You know, that's possible too, I guess. Or maybe that's what they want me to believe. No. But yeah. So we try to be balanced. Somebody's saying, "Hey, I hurt myself in jiu-jitsu. I hurt my quad." Dude, I'm not a doctor, brother. You know, I have no idea. All right, baby, I love you. I'm not a doctor, dude. I really have no idea. You know, I've never really genuinely hurt myself outside of like my arm hurts after an arm bar. I have like groin, right thigh pain. But jiu-jitsu is very hip intensive, so maybe that's what it is. I'm a new trader. Thanks for the insight. It's responsible of you, in my opinion, to repeat those warnings and stuff. Us newbies got to learn 100%. And again, the people that complain about it generally are the people that get sold on courses. Like I've tried to work with a lot of people in the past. And I'm sure I'm difficult to work with, for sure. I like things my way. You know, like I like things how I like things. And again, it's my business. I want to run it how I want to run it. And people try to influence that or control that. And so, you know, either way, I've worked with a lot of people. One of them was just super tied to the hip to like a guru mentorship service. And again, the problem is these people are looked at sometimes like celebrities. Look at NVIDIA pop up. It's probably going to make the NASDAQ run. So look at NVIDIA pop up. NVIDIA just broke highs of the day. It had a really weak day yesterday. It just broke highs, and now it's since contracting back down. But the point is, like, some of these traders end up looking at some of these gurus like celebrities, right? And a lot of the time they're just marketers, you know, but they get stuck on it being moderators in their chat rooms and really just kind of getting scammed, unfortunately. And some of them are good. This is not an overarching state. This is not I don't want to paint everything with the broad brush. Good ones. There's genuinely some good, you know, like Topstep is great. I love Topstep. And I think they've got great content too on their YouTube channel. You know, and there's a lot of other good resources for finance online. But then the bad ones just kind of make everybody look bad, you know. Like I try to do good. I think the bad ones make everybody in finance look bad sometimes. But there are good ones out there, you know. Yeah, I got you. I'll send you the playlist. Just give me a second. I'm going to cover the opening bell. I got to find it, but I'll give it to you. I got you, bro. What's your favorite indicator? 200 EMA and VWAP combined is kind of my favorite. Slow and steady beats knee-jerk reaction, and Powell seems the type to err on the side of caution. Yeah, he's balanced. He doesn't want to crash or a deep depression under his watch, right? I promise you he doesn't. Like, you got to look at it in terms of what Powell would want, and he doesn't want that. He's going to be balanced, and he has been balanced, I would say. I don't know if 50 is balanced. Like, definitely top 3-ish doctors in the world right now. Reminders regarding most people losing helps me not to trade, so it helps me out. Yeah, I'm definitely top 3-ish for martial arts ever. Top 3 spazzy white belts in jiu-jitsu in the world right now. Anyways, market's about to open, chat. Yeah, for sure. All right, there's the opening bell, chat. Let's do this. Yeah, we just don't get along with everybody. That's normal. All right, guys. So Q is back down. Choppy range like we thought we might get. I'm going to pull up Topstep at X here. We're going to be day trading on Topstep today. Yeah, I think what might have made me hard to work with before, like where I generally run into problems with people, and Pawn's been great. I've worked with Pawn for years. Great moderator. You know, I think we're both fair, and it's all good there. But one of the things I always try to tell people, one of the big problems that I run into, right, is like I'll hire like an assistant for my channel, right? And what I learned very quickly is a lot of them eventually expect me to give them equity, you know, and whatever. And that's just never something I'm going to do, right? And so, you know, I've had people that want to be friends and they work with me and they help me produce content or whatever it is. And then they start to get really, like, if they start struggling on their end of life, even though I always paid them super well, you know, I'd pay people like a couple $100 for showing up on stream for like an hour. You know, so they're making $200 an hour, you know, so I'm paying them very well. But I think resentment's easy to have. And so if you see me doing well, it's really easy to get weird about it. Nvidia's starting to push up though, guys, but so far we've actually had bearish action in the NASDAQ. And again, I'm going to have the same thesis of yesterday. I think we might have choppiness today, especially it's FOMC day. We might have choppiness leading up to the FOMC meeting. And so we're just kind of hanging out now and talking about stuff because I'm waiting for I don't want to trade right now. Anyways, the SPY just cracked under low. So the SPY actually went red on the day. So the SPY broke lows of the day. It's now technically red. Slightly red, although it's pretty flat. I'm going to put gold up on this chart as well. And then again, we got Nvidia up on the top chart. The whole market essentially follows Nvidia. But yeah. I'm going to just put 2 charts up here as well. Yeah, so a lot of them started to kind of expect equity and do things where they felt entitled to equity. And so when I would say, hey, look, you're not going to get equity. Like, I'm never going to give equity to anybody. And I would always tell them that in the beginning. That sometimes would like start like resentments, you know, when most of the time I created the channel before any of them were around, you know, and like I had been building it for years, and I'm just not going to give somebody equity because they, you know, because I hire them, because most of the time I'm paying them anyway, right? So like, and again, I might be hard to work with, and so I think it's probably easier for me to just not give anybody equity, you know. All right, so NVIDIA testing lows here. We're coming all the way back down. I'm going to short this. It's a little early for me to start day trading, but I'm going to short this in the NASDAQ 100 micro. Try to get some a bigger gain in, and then maybe I'll add to it once I have that gain in. And if I don't, I'm not going to add into it. I'll just cut it if it's small. NVIDIA's starting to pop up a little bit. I don't like that. I will add to it now. We got 2 contracts. There we go. All right, good. We just made about 25, 30 bucks at the open. We're going to see if we can keep grinding it up. They're just always contractors. Pawn's good because he got young kids. Yeah, dude. I'm a child at heart. You guys know this. All right, guys. Yeah, unfortunately, guys, I just don't need anybody else right now. Pawn does a pretty good job, and you know. So I just don't need anybody right now, unfortunately. We got the big downward action here, which is kind of just a continuation of the choppy range that we've gotten almost all day. So we're going to wait. Again, we're going to take it slow and steady right now. All right, guys, the NASDAQ started to go down to 473s. Data analyst position pays 150 in my city. Thinking about applying for it. Yeah. The only job I would apply for right now, because I do a lot of freelance work outside of it. The only job I would apply for right now would be like a news, like a news communication / like finance news, you know, and it would have to be good enough towards like the pay would have to be good enough, and I would have to be able to do this at the same time, you know. Well, it depends on what it is. So they're gonna put that requirement out there, but you can still apply for it and get seen, and if you do good enough, they might still hire you. It just depends, man. When you're trying to get hired, you're going to have a bunch of high requirements that not everybody's going to hit, and that doesn't matter. They're still going to look at it, most likely. You just got to be seen. You got to get your resume seen. Anyways, downward pressure. We're at the bottom of the range now. I would buy the dip, but I think I'm a little bit too late on it, unfortunately. Personal cook. Everybody hates getting out of a stock and then have it pumped. Yeah, that's human nature, though. All right, I'm going to start buying this dip now. We're down enough. Hold on. NVIDIA's right at the lows. That's the only thing stopping me from buying it. All right, we'll buy this. All right, so we're going to add 2 contracts to it, take a small risk. Down a little bit here. I want to see if we fly back up, though. There we go. Boom. Ah. All right, so we caught the bounce. We made about $10 or $11. All right, so again, you can kind of see NVIDIA dipping all the way down to under 115s. So we have some extension on the downside, and I am looking at the broader range of the day, which is sideways. But I'm watching NVIDIA kind of closely here. How come your position sizes are so small? Well, we're taking it slow today because it's FOMC day. You know, we're also trying to build up profit in this account. We're up hundreds in this account, but I'm trying to build up $1,000 in profit first before I take more risks. And that's how you stay funded in these funded account programs. Like, I could just swing for the fences if I wanted to, but you know, again, I don't know if that would work. Weakness in NVIDIA is kind of confusing. Yeah, I mean, I'm going to buy this dip. We're going to add more to it here. 2 contracts. Maybe get into 3. Got a little bit of gains there. Gonna add more to this winning trade. There we go, 40. Boom. All right, so we just made about $45, $50 really in the last couple trades. So we caught the bounce. Again, choppy range, predictable. All right, so far so good. Again, this is the big edge of Topstep X because there's no commissions, right? There's no commissions. I can take micro contracts and just take little small trades until my heart's content, and it's just super easy. Build up hundreds in profit very easily. Well, if you want me to teach, like, again, and I've said this before, so just prefacing this with it is a repeating of what I've said before. This is repetition of something I've said before. But if you really want to be happy in life, do something you enjoy, right? Even if you make less money. You know, if you really want to be successful at a business, monetize something that you're interested in. You know, that's the way that you're going to have the passion needed and the knowledge needed to keep pushing, because business burnout is real. You get burnt out easily. Generally, the more burnt out you get is when you're doing the worst, right? So if you're not doing great, you get more burnt out. If you're doing great, it's a lot easier to stay motivated towards building. And you're not going to be as burnt out if you do something that you genuinely enjoy. And so if you look at all the businesses and investments that I've attached myself to, right, like a lot of them are things that I'm genuinely interested in, you know, and I think that helps you stay motivated to do it, right? Like, that's the key. Monetize your passions, figure out what you like doing, and then build it. That's the way. All right, we're right back up in NVIDIA, right back up in the S&P, the NASDAQ, the Q. I told you guys we would get flat action today, man. It's been incredibly predictable, you know. Honestly, and it gives me confidence because I told you guys for the last week straight exactly what I was going to do the day of. And that's exactly what we're doing, which is we're attacking chop. And again, if you look at the market, even if we zoom out here, right? So if we look at the SPY here, I'm going to put up the NASDAQ 100. If you look at the NASDAQ 100, which I'm putting up the Q, the choppiness is so predictable. Like, look, up, down, up, down, up, down, up, down, up. Easiest way to make money in the market, in my opinion. You know, I could literally draw like a rectangular box around all of it. You know, very simple, very simple. Yeah, we'll see what kind of swings we get. I'm ready for him. You know. Gold coming back down. Yeah, I mean the market's down. Gold generally moves macro with markets unless we are tempting towards like a recession and stuff. Tesla looking weak. Yeah, well, Tesla's up a lot, though. Tesla was at 205s not that long ago. So, like, Tesla being up some is okay. Yeah, I'm testing some of these indicators that I designed. Pretty solid. And again, if you haven't already, check out Topstep. Topstep funded account program in futures. They give you a demo, test your skill with it. Again, this is the single biggest edge in funding. And again, people were asking me if they're legit or if most day traders lose. Most day traders do lose. And so if you try out a funded account program, you're probably going to lose. Most day traders do. It has nothing to do with the funded account program. It has everything to do with day trading in general. Most day traders lose. It's a lot cheaper to lose here than to put up 5K and lose that, to be honest. Most of the time, at least, right? Most day traders lose. And so you're probably saving money even if you lose on these funded account programs. But Topstep, the best edge in funding. 0 commissions on Topstep X. Literally, I could take these small little scalping trades, get in, get out, get in, and get out. Look at my P&L. Build up small amounts of profit in a much safer way. And ultimately, there's no PDT in futures. Most pro day traders trade futures. The futures market, you can day trade the S&P, the NASDAQ, gold, some currencies. And so even some Forex traders probably should be trading futures. And you can day trade basically the S&P. Patterns are very similar to blue chip stocks. Again, what these funded account programs do, what Topstep does, is they give you a demo, test your skill with it. If you pass, they fund you. If you fail, you only lose the monthly subscription, in this case, $49. And so it's a great way to learn. Middle ground of pressure. If you lose, you're out $50. If you pass it, 90% split. Once you're funded, you get to keep your first $10K in profit. And they've paid out over $40 million, been around for over a decade. So if you want to check it out, here's the link. They are a sponsor and affiliate of mine. I'm definitely biased because they pay me money. I'm biased. I do trade off stream. I'm one of the top 3 worst traders of all time ever in the world. Don't copy me. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Top 3 disclaimers in the world right now. Also, you have to believe in you. Yeah, I mean, it has to... You know, it really is, to me, it's a passion thing. So I've started a lot of businesses, you know, but the ones that were always the easiest to start were the ones that I enjoyed doing it. Like, I love doing this live stream. Like, I genuinely, and what's ironic is growing up, I was always introverted. You know, I did not like being around a lot of people. I'd go to parties and stuff with friends and I'd get super nervous, like uncomfortable. And so the irony is that I've got 650 people watching me right now, and during the FOMC meeting, we'll probably have over 6,000 people there, I'm guessing. So that's just hilarious irony there, where what I do for, you know, one of my jobs now is to do this, but the point remains, the point to go back to it is that you have to enjoy what you're doing. Like, every morning when I wake up, I genuinely look forward to doing this. I genuinely look forward, even with some of the chat being toxic, I genuinely enjoy doing it. It's something that I have fun with. I love finance. I love markets. I love using my brain to find edge in anything. You know, I love poker. I was always a poker player. And so find something you genuinely enjoy doing. There's lots of ways to monetize that. You know, just depends on what it is. But research, it'll be a lot easier to build things that you enjoy and that you're interested in than to just figure out what you think pays the most and do that, you know. At least that's my own 2 cents. Russell shooting up. What's the Russell? Is it YM? Yeah. No, that's the Dow. What's the Russell? It's RTY. Small caps are pushing up a little bit. You know, I think the whole big cap market's panicking right now. That's why it's down. Same here. Super nervous. Thanks for leaving. My career got me over by meeting new people in their homes over and over again. Yeah, exposure therapy always a good move, I think. My daughter's afraid of bugs. I always tell her the only way you get over it is to be around them, you know. All right, so we got a little bottom here. We got this little double bottom here, right here. So we'll see what happens with it. Again, the FOMC meeting's a little bit later. As an older person with a couple kids and grandkids on the way, I totally agree. Being happy is more important than being rich. Having money is important, but not the most important. Yeah, 100%. It's just like, look, life's hard, man. You know, you got to find things worth doing. You got to have purpose. You got to figure out what you like. And that's why, like, people get mad at me for saying the same thing over and over again. Like, I'm doing it to try to help people. I really am. I'm trying to protect people. I'm not perfect. I do this to make money. But the reason I repeat those things over and over again every day is because people need to hear them. And you might be here every day, and I appreciate you if you do. I really am. If you're here every day and you're joining me and helping me, and look, I genuinely appreciate it. It's all love for me. It really is. But there's some new people that haven't heard it. And so, there's value in them hearing it. Even if you've heard it 1,000 times, you know. Yeah, gold's coming down, but gold's had such a crazy year. My wife's asking me if it's time to buy gold. And I always tell her the same thing, which is that it depends on how long you hold it. Gold over 30 years is almost certain to go up, right? The problem with gold is that, I say this every day, this is another repetition. Gold can downtrend for a decade plus. You know, here's a 20-year downtrend in gold right here. Like, look, let me put this up. Let me get rid of this banner. Gold's, here's a 20-year downtrend in gold. Right? 20-year downtrend. You know, and then it followed by a almost 20-year uptrend. You know, 10-year downtrend, almost 10-year uptrend. Sideways chop for a few years, and now we've been on a 5+ year uptrend. And so the problem with buying gold here is that it's up a lot. And gold can and does downtrend for a long time sometimes. And so gold long term, like 20, 30 years, is pretty safe. Short term, meaning like 5, 10 years, it could downtrend that entire time. And so, you know, that's the only big problem with buying gold, is that it can downtrend for a long time. So you just got to be prepared for that if you buy it. And as always, it's relative to the time frame you're holding it. I've heard it 1,000 times. New people still need to hear it 100%. Yeah. What do you think market will crash with 25 points and rally with 50 or opposite? I think it's the opposite. I think the market wants 25 or less. And I think the market might be afraid of 50 basis points or more. Why are they afraid of 50 basis points or more? Because 50 basis points more or more can signal panic, can signal something breaking in the economy, and that might make people freak out. I'm speculating. I don't know. I'm speculating. In what regard, Phil? Yeah, 100%, Tony. You know, but gold, I mean, I don't know. Stocks definitely weren't. So like an example of this is like, look, here's the Q in the same period of time, right? Now, the Q downtrended Let's see. Here, I'm going to have to put the NDX up to give you a better look at it, which is a longer term period. So the Q downtrended. I'm trying to go back to the 80s. I guess this is the 80s. Here, I'm going to put the S&P up. It's longer. Right, so the S&P 500 actually went up. So people are saying, like, look, so here's that same period. So gold downtrended from 1980 to 2000. Here's 1980 on the S&P. Here's 2000. So S&P 500 went up in the same period of time. Now the Nasdaq was different, but the Nasdaq was still a relatively new instrument at that point in time. We can look at like the Dow. I don't think I can look at the Dow that long either. Is it DJI? Yeah, there it is. Okay, same thing. Dow, 1980 to 2000. Same period of time where gold downtrended basically the entire time. Here's 1980. There's 2000. All right, so the Dow, again, same correlation with gold. Gold, 1980, 2000. So my point is, the market, like the S&P, the Nasdaq, the Dow Jones, they generally do not downtrend for that long. Again, there's only been 3 times in history where the S&P has downtrended approximately 3 times, more than 2 years, for more than 2 years, right? So bear markets do not last that long in stocks, and that's what a lot of people have to understand. Bear markets in gold can last for decades. And so you got to take that into context. But gold has outperformed the S&P over the past 20. Gold has 7 or 8x in the last 20 years, 25 years. The S&P, I think, is like 5x. I'll have to go back and check. But, yeah. So it's, there's a lot of ways to look at it. A lot of ways. Right, which is exactly the point, Tony, is that generally in recessions and depressions, gold outperforms, right? And so I guess the question you have to ask yourself right now in terms of whether it's time to buy gold is, what do you think happens over the next decade? If you think the economy turns really bad, maybe it is a good time to buy gold. If you think the economy rebounds pretty safe, then it might not be a good time to buy gold, and we might downtrend. I don't know. I have no idea what the outcome is going to be. I don't have a crystal ball, but I think that's the lens you got to look at it under, Good, Benson. Hey, that's what I'm here for, bro. Super micro pumping. Yeah, I see it. It's up to 455. Got up to almost 460s. Buen Lambo. Mañana, mi amigo. I'll be long gone by then. Well, I have 2 crystal balls. Gold paper shares were also manipulated more so than now. Yeah, I mean, there's a lot of lenses you could look at this under. I don't know. That's a nice hat. Yeah, top 3, I would say, in the world right now. It's time for me to get a freaking haircut, though, bro. Yeah, I saw the AMD PlayStation deal, for sure. I'm going to get out of here, guys. We'll be back in about an hour. I'm sorry. We'll be back in a few hours. Hey, I love you all. Y'all have a great day. Again, understand, Topstep. If you want to learn to day trade, try a funded account program, in my opinion. If not, you're going to lose thousands. And again, if you think you're going to be some savant prodigy, you're probably not. You're probably just going to lose thousands if you risk thousands. And so try a funded account program if that's the case. It'll limit your risk. Most day traders lose regardless, but you'll lose less. And if you are good enough, you can potentially roll up some profit, withdraw, all that good stuff. They're a sponsor. They pay me money. I'm biased, but I think it's a good option. And I think it'll help traders is really why I do it. But hey, I love you all. Y'all have a great day. I'll see you guys later. Yeah, have a great day, guys. We'll be back in a couple hours. I mean, FOMC meeting later on today. Be here. Be ready. Be there or be square. I'll see you guys later. Y'all be good. Have a great day. If you want the links, check out the links in the description. I'll see you guys. Again, it starts at 2 p.m. Eastern Standard Time. We'll probably start the stream at least a little bit early. So y'all be good. I'll see you guys later.